Welcome aboard the Bitcoin Express. My name is Chase. Let's get to it. According to Fidelity, the best performing investors are dead people. Yes, you heard that right. According to Fidelity, a study they did between 2003 and 2013, they found that the best performing investors are either dead people or people that are inactive. And why is this so? This is because with these dead investors or inactive investors, they're not reacting to markets. They're not panic selling. They're not panic buying. There's no FOMO. They are buying good products and they're letting it grow. That's what an investment is. You buy something, you let it grow. And the longer you let it grow, the greater the gains. So being that we're still alive, how do we mimic these results of the dead people while we stay alive? We can do this by understanding three important things. By understanding these three things, we can take control of our mindset and prevent ourselves from panic buying and panic selling and watching our investment grow. The first thing we must understand is that nothing goes up in a straight line. Even the most successful companies, Apple, Amazon, Netflix, they do not go up in a straight line. Of course, if we're looking at the short chart of Bitcoin's history, just about 10 years, we can see it's very choppy. A lot of volatility, huge gains, huge losses. Now look at this 10-year chart of Amazon from 1998 to 2008. It's almost similar to this Bitcoin chart. Major gains, major losses. Same thing with early Amazon. Major gains, major losses. So it doesn't matter what the product is. It's always going to go up and down, especially for these huge companies. Nothing goes up in a straight line. But if we're trading on the short term, we're going to miss these massive gains because these massive gains happen over the period of 10 years, 20 years. Same thing. Well, back to this Amazon example, it looks very choppy over here, very volatile up and down. But when we zoom out and we see the long history, we can see it looks like it actually goes straight up. Look at this chart. It looks like it's going straight up. But when we zoom in, of course, we can see it's very not volatile, but major gains and major losses along the way. And I do believe in the future with Bitcoin, this is my opinion, my belief, I do believe that the chart for Bitcoin will look something similar to this, almost like it's going up in a straight line. And this $20,000 to $3,000 drop will pretty much be invisible in the chart. I've heard so many people say, if I invested in Apple early, if I invested in Google early, Amazon early, I'd be so rich. And I'm always thinking to myself, most likely you would not. And same goes for me as well. I think if I invested in these companies, even the day they started, I would not have had these major gains of Apple, Google, or Amazon. And the reason is because I likely would have sold along the way, just like most people. Even if we look at Netflix history, we see that they, again, one of the best performing stocks, they have had major drops in their price. This was in 2004 from $5 all the way down to $1, over 70% loss. And it wasn't like it only happened once with Netflix or any of these companies. It's happened multiple times. And as we go down Netflix's chart, we can see that they've had other major drops in their history. Chart freezing on me here. All right, we're on to the present. Okay, bottom line is a lot of these charts have major gains and major losses. And if you sell in the short term along the way, you panic sell, or you panic buy, you're going to miss out on the big gains. Of course, it goes for Apple as well. This little drop here, it looks pretty little, but when we get a little closer to it, we can see how massive of a drop it is. From up here at the top, $1.20, all the way down here to 26 cents, over 70% loss. And like I said, it doesn't happen only once with these companies. It happens multiple times. We scroll down the line and we see Apple again had a massive drop from up here, from about $6 all the way down to $2. Again, over 60% losses. So if someone were to panic sell at these times, they would have missed out on these massive gains. And of course, with Bitcoin, I don't know how many people would have held Bitcoin from the beginning up until even 20,000. Because just like this tweet says, this is a very famous tweet. This man said, I wish I kept my 1,700 Bitcoin at 6 cents instead of selling them at 30 cents now that they're at $8. This person could have never imagined it would even reach maybe $20, even $50. And I think the same would go for me and for you listening. If you owned 2,000 Bitcoin and it went from 2 cents to 20 cents, you'd be so happy, so shocked. You would likely sell. You would have never thought it could go to 50, 100, 5,000, 10,000. So it takes time. You need to let it wait. So that's the first thing to understand. The second thing a person needs to do to mimic these results of these dead investors or these inactive investors is take control of their temperament. And this is a quote from Warren Buffett. I use a lot of his quotes in these videos, and I know a lot of people are not a fan of him because he hates Bitcoin, but his quotes are amazing, so I will use this one. He says, quote, "Success in investing doesn't correlate with IQ. Once you are above the level of 25, once you have ordinary intelligence, what you need is the temperament to control the urges that get other people into trouble in investing." So what Warren Buffett is saying here is when it comes to investing, you need basic knowledge. But what a person really needs to do is take control of their temperament. They can't react. They can't panic buy. They can't panic sell. And in the book, The Intelligent Investor, which I do recommend to everyone. It doesn't matter if you have no interest in stocks and you just want to stay in whatever it is, art or cryptocurrency. This is a must read. And I think the biggest lesson I took away from this book is that a person needs to take control of their mind. There's a lot of psychology involved in investing. And a person that is disciplined, that can control, that doesn't react immediately to markets, takes their time to think it through, has a much better chance in the future of making successful investments and watching them grow. And the third thing that I think it's very important to understand is that day trading, for the most part, is a loser's game. A very small percentage of day traders are actually profitable. It's estimated that about 10% of day traders are profitable, depending on the study. Some might say 5%, some might say 15%. And I know you might be listening and thinking, what are you talking about? I've day traded and I've made money, or my friend day traded and they made money. But ask this question. Did that person make a few day trades over the period of 1 month, 2 or 3 months and make money? Or is this something they have done throughout the year, maybe even 2 years, 3 years in a row? That's where it becomes very unlikely that a person actually consistently makes gains over the year. When it comes to trading, remember, it's what you make from year's beginning to year's end. So from January 1st to December 31st. You might know people, I know people like this, that have made thousands, $10,000, $20,000 in a day, in a week, in a month, and they think they're professional traders. And you know, that is a hard thing to do. Maybe sometimes you get lucky and you have these massive gains, but come back to that same person, or I'll ask you if you're one of these people that have made these big gains. Come back a year later, and what is your overall gain? Many times, if someone maybe makes $40,000 with option trading or risky trading in the short term, then down the line in that same year, they'll make bigger bets and they end up losing that money. Of course, there is exceptions. Like I said, 5, 10, maybe 15% of day traders do make money, but for the most part, they don't. So what to do? Don't day trade. Hold it for the longer term. So by understanding these 3 things, it can really help a person hold on to their asset for the long term. Of course, this doesn't mean that in this case, I would just buy something and just sit on it forever. I still would want to do my due diligence and make sure that I buy something I believe in. And when it goes up, I'm happy. And when it goes down, I'm even happier because now it's on sale and I can buy more for the long term. So some practical tips you can take is first, just removing the temptation. Just like someone on a diet is not going to buy cake and cookies and leave it in their kitchen because they know if it's there, they're going to eat it. Don't keep all of these applications, let's say these trading applications, crypto applications on your phone if you know you're going to be checking it every minute. If you know as soon as something happens in the news or the market, you're going to go right on your phone and trade it away. So that's the first thing a person can do. The second thing is know that if it's something, I'll use myself as the example, because again, this is not financial advice. If there's something I know is a good product, and when it goes up, I'm happy, and when it goes down, I'll buy more, I know I'm not going to touch it. So I keep it away from my fingertips. So with Bitcoin, for example, or cryptocurrency, you can store your cryptocurrency offline on a ledger or a Trezor. So number one, it's more secure. Obviously, that's the most important part here. But the second beneficial thing is that it's not as easy for you to access. Again, you won't react right away to panic sell, or, FOMO buy, FOMO sell, panic buy, panic sell. And maybe the most important thing is taking control of your mindset, having a low time preference, having a long horizon, knowing that you do not need that money in the short term. So using myself as an example again, by doing this, by taking control of my mindset, I would set aside some money that I know I do not need today. I don't need it tomorrow. I don't even need it next month. This is money I do not need for maybe a few years. I set that aside, put it in whatever the investment is I believe is going to do well in a 10 or 20 year period, and I let it sit there and I don't react. Take control of your mind. I hope that you found value in this video, and if you did, I want you right now to go down below and subscribe to the channel. Thank you for listening, and I'll see you next time.